Very engaging discussion on the high decibel world of Karnataka politics and politics in general. We are back to a slightly chilly discussion on the funding winter, the tech implications of the funding winter on the tech startups ecosystem, the startups ecosystem in general, and what these eminent gentlemen on the dais have to say about the implications of such a winter, if I may keep calling it that. And I'm sure all of you have heard this term, repeatedly about the tech winter and the startup ecosystem and the implications. The Game of Thrones said winter is coming, but winter, as we know in the startup ecosystem, is already here. It's hit the entire global tech ecosystem pretty hard, and it has had implications for India. We've had a situation where very few, or rather no unicorns were created in the first quarter of this year. We've had this SVB collapse and its implications, at least for a very brief, terrifying weekend on the Indian startup ecosystem. So without much ado, I will start off by asking Siddarth, who has dealt with so many of them and continues to do so. Siddarth, and I will go around, this panel asking for a bird's eye view at first of what you think is the current scenario and the road ahead in terms of the tech winter and its implications.
So, happy to. I think the tech winter has been one of the most hotly debated topics that we've seen for a long period of time. It's a contradiction in terms itself. But I think one thing is very important to understand is that valuation is actually a function of fundamentals, a function of potential, and a function of market sentiment. I think the market sentiment is a macro factor that has adversely affected the entire startup ecosystem to a large extent. If you study the rise of the startup ecosystem since about 2016, 2017, you'll notice a massive dislocation happen in 2020 itself. Now, 2020 is where the federal governments and the federal banks across the world ended up printing a large amount of money, and interest rates actually came down to zero. Now, when that happened, larger institutional investors started actually chasing alpha. So in order to generate that kind of alpha, fixed incomes were almost giving them zero yields. The stock market was severely dislocated because of the sentiment was bad. So startups in the private companies emerged as the hottest asset class, followed by crypto itself. Now that the interest rates have started to rise and fixed incomes have actually increased in terms of their yield, we're seeing a massive pullback of capital from all these particular areas. So this is actually the market sentiment factor that's actually affected very strongly upon that. Now, on a fundamental basis, I think one of the biggest changes we see in the startup ecosystem is a shift from growth to profitability. Now, when the value of a dollar today versus the value of a dollar 5 years later was actually the same, because interest rates were extremely low, every investor encouraged the startups to start following growth, saying that once you have growth, profitability will end up actually following. Now that interest rates have actually risen, we've seen them actually change their tune to say while growth is important, profitability is actually key. The ability, any company that has free operating cash flows is king. Now that switch, this is 6 to 7 years of learned behavior that has to switch within a short period of time. And we're actually seeing this actually play out amongst all of India's unicorns for that matter. And one more thing that needs to also be said is even though everyone actually chases the amount of capital coming in and investments is a function of burn. How much money I end up burning, therefore I end up having to raise a large amount of capital. But if the ecosystem is trying to actually turn profitable, and many of them are trying to turn cash flow positive as of now, the need to end up raising as much capital as it did previously actually goes away. So I wouldn't call this is a winter. Yes, there has been a funding slowdown. There will be a number of business models who I believe are actually children of a low interest rate environment. They could only survive when they had an infinite pool of capital available on tap. Some of these business models honestly need to actually die. This created destruction that's inherent to the startup ecosystem needs to actually end up showing up such that more innovative businesses can come in. So every winter is actually followed by a spring. We are fairly certain that the spring is actually in the offing itself. And the startups that come out of this are going to be far more resilient than anything we've actually seen in the past.
That's very well put, Siddarth, that if winter is here, can spring be far behind, as they say. MSR, you've created this wonderful ecosystem of startups at T-Hub. You deal with a lot of them, you provide mentorship, there's mentorship available, funding available. What is the sense you get? Is spring likely to come sooner than we expect now, or is the worst over? What was the sense?
Sure, I think, I don't think there's a one-size-fits-all answer to that. So I think, 2021 was an anomaly, right? It is what you call a scorching summer followed now by a harsh winter, right? So having said that, and I think Siddarth referred to a number of factors, interest rates, Ukraine, etc., right? So all of that is reality. Now, again, one has to look for silver linings sort of thing. So obviously, if you look at numbers, if you look at, for example, the Q1 of this year, funding dropped by about 75%, right? And if you look at even the last month, right, overall investment came down to about, from 1.91 billion, it came down to 1.05, almost a 47-48% drop. So reality is, there is a slowdown, right? Now, but I think just building on what Siddarth said, clearly I think the push now is to get your unit economics in place, figure out how, is there a path to profitability, right? I think it's hard to envision, a situation where businesses can keep continuing to burn money endlessly with no clear path to profitability. So I think we are starting to see some sanity return. I think good businesses will continue to get funded. We are also seeing, interestingly, in the work we are doing, we are also starting to see a lot more. Today, again, I think there's one more factor we have to think about, which is, end of the day, I think the VC world, and Siddarth, you can add to this, I think is there's a recognition that, our overall pool is still fairly shallow. I think a lot of businesses which got funded, particularly in the B2C space, were predicated that the consumption will keep, it's an ever-growing spiral. Reality is, I don't think there are more than 100 million consumers. So think about this, right? If you think of Zomato, they have, end of the day, for a business which has been around for as long as they've been, they have about 50 million consumers, right? You think of PhonePe, for example, or UPI in all. Right. It's only about 250 million of the 1.3, 1.4 billion. So I think there has been a correction. I think people are starting to recognize that growth is possible, but you have to be frugal. And second is, the market is not as deep as they thought it should be.
Anas, you deal with a lot of billionaires and you come out with the billionaires rankings and all of that. What is your sense of the fact that, the startups now, with the funding going down, unicorns not happening at all this year, as opposed to last year when the same quarter had, I think, 14 of them created. What is your sense of where we are in that? Is it a valuation game still, or have the lessons been learnt? Like, both MSR and Siddarth seem to say that now the path to profitability, and VCs and PEs are clearly insisting on that path to profitability. And we see that actually in a lot of the listed big former startups as well. I don't call them startups anymore because they're listed, they've become big, but they're also now concentrating on profitability, having learned their lessons in a sense at the public markets. What is your sense?
Thanks for the opportunity. I think the way we compile a list and through Hurun, what we try to tell is the story of India. I think Indian story has to be spoken from a decade perspective, not 1 or 2 years, right? I think in 10 years from now, there will be massive amounts of wealth creation that's happened in the country. Only then can India hit a GDP of 8 trillion or 10 trillion, whatever we're after. And the after effect of that will be cash flow and family offices and traditional families getting into active investments in alternative assets and so on. So I think this wake-up call has been fantastic from a startup perspective. And even from our fund, we launched our first fund in January. And we invest in pre-series, very early stage kind of opportunities. So at that stage, this is really a cool position to be in, to get companies with good valuation. So it's really a great opportunity from an investing perspective. And for the startups which are at that stage, it's a great opportunity to look at the operating model, revenue model, how would they achieve. It's like we look at startups as a mountain. The founders will have to climb that mountain. And so far, a certain path has been taken by the startups to climb that mountain. Maybe that path has to be changed now. And this funding winter is a wake-up call for that. And I really believe that this will be a great opportunity for investments. And from an Indian context, over the next 10 years, one would see a lot of activity from billionaires and family offices being an active participant in the whole ecosystem.
Siddarth, startups are all about innovation. Innovation is what defines them in that sense. You and people like you invest in that innovation and, the dream which some of these entrepreneurs have. Is there then, with this funding winter or this drying up of funds, is there a clash in a sense between the need for constant innovation, which in a sense will also be guzzling funds sometimes, and the need for profitability, which is now uppermost? How do you balance this innovation versus profitability, or is there no conflict?
No, there is. I think so. Both of them actually go hand in hand. Scarcity is one of the strongest drivers of innovation around. When you have constraints artificially placed upon you, you actually turn very, very innovative as to how you can maximize the limited number of resources that you have. And indeed, startups are actually, have actually proven this to a very large extent, except for the last 2-3 years, where we've seen massive amount of overinflation in valuations. But that overinflation and valuation has always been a function of slightly later growth stage startups. Even in the metrics that MSR actually spoke about, even though the funding has actually come down by 77%, that funding decrease hasn't been uniform across all the cluster startups that are there. Your seed stage companies and your early stage companies actually saw an increase in the amount of funding they got on a year-on-year basis itself. The greatest dislocation of funding is actually happening in larger companies, where the expectation is that you should have turned profitable by now. If you start looking at it, we have so many larger unlisted companies that I'm very sure their founders and companies feature on Hurun's list as well, where actually have listed market companies which are far more profitable, but actually suffer a lower market cap. So the growth narrative, or the narrative that was a very inherent part of the valuation story, has actually now clashed with reality, where people want to see how is this dream. This ROI is not return on imagination. It's actually return on investment. So all the imagination and dreams that you have, how does that actually translate to reality? And I think the innovation that we're seeing right now, given the fact that the digital public goods have actually been laid extremely strongly, we're seeing immense amount of innovation come out of India that will actually transmit to the rest of the world. It's Silicon Valley that built for the first 1 billion people coming onto the internet. It's going to be India that's going to build for the remaining 6 billion people who are coming onto the internet right now. I would actually like a neutral kind of space for what they end up doing. UPI, anywhere else in the world, would have been a $100 billion company. It's free. It's completely free for that matter, and we've actually built unicorns on top of that. ONDC, for that matter, is going to actually unlock e-commerce, not just for the 50 or 100 million people that most of the startups end up chasing. It's going to unlock it for everyone across the whole of India. You'll actually see a mini Flipkart in almost every district in the entire country. We're going to see the biggest defragmentation of e-commerce, which is consolidated now. There are top 2 players, before Reliance and Tata, etc., actually came in. So this cycle of creative destruction will actually continue, and innovation is the foundation of this, and innovation will always thrive in this scarcity. The moment you have unlimited resources, you turn lazy, you turn complacent. And that's actually going to be the death knell of larger companies. So the more nimble you are, the hungrier you are, the better you can actually combat this winter, and the more stronger you can actually end up emerging.
That's again very well articulated, Siddarth. MSR, do you think, what Siddarth is saying is that, and because of that, you're witnessing that funding is actually coming to the smaller and seed stage companies rather than the profligate ones which have really spent and overvaluation and all of that. So do you see that sense settling in at the startups which you have sort of dealt with at T-Hub?
Yeah. So if you, again, just to build on what Sid said, if you look at just 2 data points, right? If you look at how many companies actually raised more than $100 million in the last couple of months, just been 2, PhonePe and Byju.
That's right.
And clearly, while there's been an overall slowdown, the funding drop-off has been much more in the later stage because of all the factors we said. Now, coming back to the innovation piece, right? I think there's a large untapped opportunity in several sectors. For example, if you take deep tech as an example, right? So we have whatever 85,000 plus startups. But if you look at the number of people who are actually focused on deep tech, it's less than 7 or 8%. It's about 5,500 sort of thing. And clearly now we are starting to see some very interesting plays in those areas. So for example, space tech. So we have a tremendous opportunity. For example, 2 of the companies we incubated, Skyroot and Dhruva, right, have been able to raise large capitals of money, a large amount of money, and have been able to do it very frugally. Right? They still have a lot of powder left.
And have done a very good job as well.
Yeah, right. So I think there are several areas. So I think space, he alluded to a few. So space, clearly, I think there's an opportunity in health, with the digital stack, etc., getting built in that space, apart from obviously fintech and so on. So including in sectors like insurance, for example, where despite everything that has happened, penetration is still extremely low. People have to figure out models. Of course, it will take some time, but clearly in several areas, which I think are going to solve fundamental issues, right? Not about delivering something in 10 minutes. Okay. I think there are opportunities for good, viable businesses to be built. And I think one more thing I think he talked about. Startups are going to be the engine for job creation. We all know that in organized industry, thanks to automation and everything else, job creation is not going to be what it was. So clearly, the next vehicles of job creation are going to be startups.
Anas, we're coming to the end of the session, but I want to spend a little bit of time with all of you about talking a bit about governance. This whole issue about profitability, the path to profitability is one factor, which of course VCs are considering. Now, I spoke to several big VCs over the last few weeks. This concern about governance is real, and we see it everywhere, right? Where do you see this playing out in the startup ecosystem, and how does this affect valuations, you think, eventually?
I think great question. I think in 2021, maybe I don't know how the due diligence was conducted, how robust it was. Maybe there was a fear of missing out as well, right? So you have a deal on the table, you want to be there, you want to get the allocation, somehow get part of it. Just last couple of weeks back, we passed a deal after doing DD for about 2 months. And this kind of environment, we have the flexibility to take that much time to do a proper due diligence and even back out of a deal if it doesn't work out. So one thing that's really happened, this funding interest, both for investors and also for the startups, right? The DD is more extensive, possibly, and also much better awareness in terms of how do you price innovation.
Siddharth, yes, this is very important for you.
So I truly believe that good governance is a lot like personal hygiene. When you do it well, most people don't notice, but the moment you don't, there's nothing that can possibly hide that stink. I think right about now that stink is something that nobody can actually end up ignoring to a large extent. Now, governance is one of the fundamental factors of actually building a business. If a company goes down because of business dislocation, something major happened, etc., investors are forgiving of it. They will actually fund the entrepreneur again. They believe it's a good person. They can end up actually doing that for that matter. But the moment a company goes down because of bad governance, there is no one in the ecosystem who will possibly end up funding that particular person. We're seeing another case play out now of a serial entrepreneur who's actually had numerous run-ins with governance, and that's actually playing out to a larger scale. It's the third time that's actually happening. Yes. I think from a governance perspective, the premium that you earn on governance is something that we've actually seen play out in the listed markets also. We've seen great technology companies in India who've actually had a fantastic premium compared to their peers because of the strong governance philosophies that they've actually spoken about. Mr. Narendra Modi just actually walked in here. He's actually done the greatest contribution to corporate governance that India has actually seen. And indeed, there are a number of startups who wish to emulate the success and the governance frameworks that have come about. That when things go bad, you don't compromise upon the core principles that you have. And that actually keeps you going strong. See, this is a long-term game. Valuation, etc., is a short-term metric. It's a shorter dopamine that actually makes you feel great. But the next day when you wake up, you actually have to go back and actually go through the entire grind again. And strong principles and good governance is something that will always keep you on the straight and narrow, and then actually make sure that you can compound. And long-term compounding is ultimately the aim of every company and every startup. And good governance is the most crucial ingredient in that.
MSR, the last word from you from the T-Hub side. What are startups learning the lesson now that governance cannot be a good thing to do? It is a must-do, and you'll not get any valuation at all or lose valuation regularly if you do not, fall in line with the governance norms.
I'll just pick up on what he said. So I think in 2021 it was fear of missing out. 2023 is joy of missing out, right? So we've seen, we've seen in many cases when investors start digging deeper and start recognizing that these people have been chasing growth at all costs and breaking all rules. So I think this is a good time for us to go back. I think, exemplar of good governance is here, right? To go back and start looking at how do you build not just for the short term, build value over long term. That has to be based on a strong foundation of ethics, probity, and governance.
talking about the joy of missing out, JOMO now, if you want to call it that, a very, very large VC, actually a CEO of that VC actually told me that he dodged a bullet by not investing in an edtech firm, which we, keep reading about. So, that's something which is something to think about. Thank you very much for an absolutely fantastic session, and you can't get better people than that to talk about this.